Inflation accelerated in September, jumping to an annual rate of 2.4%. That's up from 1.9% in August. And for more on how that could affect the Bank of Canada's rate decision later this month, we are joined, and the investment strategy in the current environment, we're joined now by Sadiq Adatia, Chief Investment Officer at BMO Global Asset Management. It's good to have you today. Thanks for taking the time.
Thanks for having me.
Okay, so now that we're seeing these numbers coming out today, 2.4%, do you expect the Bank of Canada to still cut interest rates by next week?
I do. I think that what we're seeing is just obviously a point in time where inflation looks a little higher than expected. But I don't think inflation is really the story that I think the Bank of Canada is too concerned with at the moment. I think it's more about the economy and making sure that, given tariffs and other headwinds that we're seeing in Canada's economy, that we kind of continue to spur the economy and the consumer to continue spending, and cutting interest rates, I think, makes a lot of sense. On top of that, I don't think the Bank of Canada or the Federal Reserve would have cut rates previously if the expectation was to cut once and just stop. I think their expectation was to continue unless there's some data points that really cause it to change their mind. And I think this one data point is not going to be that reason.
So you don't think that this 2.4% is any cause for concern? Or cause for alarm?
No, I think they'll watch it carefully. Yeah, I think they'll watch it, and see the trend on this on going forward. But I think this shouldn't stop them from cutting interest rates.
Okay, let's move on now and take a broader look at the market. Are you positioned, and how you're positioned at present? Is there anything in earnings season that we've seen so far as earnings season kicks off once again that would you're kind of keeping an eye on?
Yeah, I mean, overall, the earnings story has been really, really strong. Last week, we saw a lot of great results coming out of the financial side. So the big heavyweights were showing great sort of earnings and growth. And I think that you saw that lift off in the financials before we saw a little bit of issues on the regional side. You mentioned Coca-Cola earlier today. I think that's great numbers as well. And I expect the earnings of the technology companies to be really, really strong as well. And hopefully some continuation of research and development spending, capital expenditures as well, that should help continue to grow the economy and see, future growth continue to remain very resilient. I think the one thing to watch for will be, the CEO's outlooks going forward, whether that is just tied to the health of the consumer or, what the future on the tariff side, unfolds for them. Especially there's still uncertainty on, the finalization of every part of the tariff structure. I think, want to see if companies are going to withhold some of their spending, or if they're, status quo and continue to move forward on their expenditures as well. I think that's the key part of the growth story. But right now, we think we're going to see good earnings, good momentum, and markets go higher from here.
You mentioned, some companies could potentially withhold on their spending given what's happening right now. Are there certain sectors that you think it's more likely to happen in, or is that just specific companies might decide to take that route?
Yeah, I mean, the consumer side is probably the most important in the U.S., for example, given that they're highly tied to what goes on in China. So if we do see, these tariffs continue to escalate with U.S. and China, for instance, then that will have a bigger impact on their side. So they may be a little bit more resilient more resistant to make any drastic growth improvements here at this stage. Canada also has to be a little bit careful, right? Because we do have a USMCA deal that's up for negotiation. And the question is, how does that play out? Right now, when we were at the BMO US-Canada Summit, both politicians and CEOs were really optimistic about things, which should bode well. However, as we've seen, there's still a lot of uncertainty towards that, and that can impact how Canadian companies decide, how they want to spend their money. They may wait a little longer until they get more clarity on what the USMCA deal looks like.
Okay, going back to earnings quickly, because you did mention something else I wanted to pick up on your last answer, tech earnings. If they continue to show strength, will that justify you staying bullish on that sector? What do you think about the future of tech?
Yeah, absolutely. I mean, the tech story is not just a quarter or 2 quarter story, right? It is definitely a much longer horizon here. We're seeing consistently strong results. The only worry I would have is just the expectations are quite high. And so you could get some, stock price depreciation, on the news. That being said, I still think that would be a great buying opportunity because these companies still have great outlooks, strong earnings, good balance sheets on top of that. And so I think the key here is going to be we're still seeing the big companies investing in AI? Are we still seeing good spending towards the cloud computing side of things? All the key things that I think are driving the themes that are moving markets across the world and predominantly in the United States as well.
Okay, we do still have some time here, so I wanted to get your take on what we're seeing with gold and silver today. The prices of both have dropped significantly, reaching record lows we haven't seen in at least 4 years for gold. Same with silver, I believe. What's your take on what we're seeing today and how this ties into everything people are watching for with these meetings between the U.S. and China? Like that's happening later this week.
Yeah, I mean, we've been fortunate. We've been owners of gold since 2023, so we've enjoyed this fantastic run up. But like most things, when you get to levels that we're at, you get profit taking, you get readjustments across the board. There's potential that things are looking a little bit better with the U.S. China, and that could be one of the reasons why we're seeing some sell-off in gold. People have held gold as uncertainty to tariffs, as well as people being using it as a hedge against the U.S. dollar. We've seen a little bit of strength in the U.S. dollar. Again, we've seen some more recent news on the tariff front. So some of there's profit taking coming along the way, but I actually think this is going to be a good buying opportunity, especially if this persists. We're very bullish on gold. We think we'll continue to see new highs in 2026, and silver is the same sort of scenario. It's kind of a second level below gold, but still tied to similar things. And there's supply issues there that don't match up to demand, so we could see a momentum shift there in silver as well. But I would not be surprised to see a little pause here or breather before we move to a next leg higher. It's similar to what we saw sometime last year when gold kind of paused a little bit before it started to rerun again higher. And I think that will be the story for gold for the remainder of this year and into 2026.
Okay, so don't panic for those who maybe have gold or silver today and are watching what's happening. That is Sadiq Adatia joining us live. Thanks so much for your time. Appreciate it.
Thanks for having me.